here we are, what is it, January 8th? 8th?
Yes.
Yes, okay. All right, January 8th, and we're coming to you with last month's stats, as we always do. But this is also a little bit more important time of the year because we're talking, yes, about December, but guys, we're also talking about how 2017 was as a whole. And I think you're probably with me, that's a little bit more important. So we're gonna play around with the year as it was, more so than just what we saw in December. Also, we know December is usually one of the slower months of the year, so those data points are a little less relevant. Christmas, holidays, and everything else that comes with it. So one quick ask from you guys as the audience. I want to know, for those of you that are tuning in or tune in after we finish live, how many of these have you watched? Just put in the comments, just say, I watched 1, I watched 0, this is my first, I watched all 12. I just kind of want to know. Does that sound good? So you just put it in, that's all I want from you. Have a little fun with me, all right? We'll change things up a little bit. So beyond the little bit of initial banter, let's dive into this because I know your time is precious. So what was December about? What did Santa bring us, as I put in as the topic? So December saw an increase in sales across all markets year over year. So this is a really good news. Now, when I say all markets, guys, for those of you guys and gals that don't remember, that's the detached market, the apartment market, as well as the attached. So across all of them, we saw bumps. Now, statistically speaking, we had better months in 2017 than the same time a year ago in 2016, like I just said. But I think there's another reason for that. And the mortgage rule changes that we've been talking about for a while are finally in effect now in January. So that was the last month we had as a bit of a push to get buyers into the market. So the good news is we had more sales. That was the trajectory that we finished last year with. Some of it is due to the mortgage rule changes coming into effect and the push, but in general also there is positive news happening. So that is a good news story. I'm going to start with a bit of the good news as well. So both the detached market and the attached market saw year over year sales increases that outpaced the inventory increases. So what that means is year over year, we sold more homes than last year. Yes, we had more inventory than we did last year, but the differential was in the favor of sales. Now, when that happens, that's a good thing. That's going the right direction, and that's pushing us towards kind of stability in the marketplace. So that's what we saw with the detached and the attached market. I'm going to pull up a graph to show you guys this a little bit more. Yeah, so this graph is a big graph, but I want to point your attention right to, I put in a red line that goes, oh, that's kind of funny. But I put in a red line across the whole series. And what that is that I went 10 years back. And I use the word stability because what's this showing is this trend line over like the last 10 years is pretty much flat. You know, the averages is what I was trying to get with this red line across the table, and says stability is kind of here. 2016, we did better than 2015 in sales, and then 2017 again climbed, and you'll see that ladder go boom, boom, boom. And now we're back to that place of stability that I can really, you know, it's much easier to plan around. So that's what we're going into 2018 with. Now, what's going to happen? We're not exactly sure, but it's definitely a great place to start. So that's enough for that graph for now. Take that one down. Now, the not so good news is, again, with the apartment market segment. Again, unfortunately, sales increased year over year. Good news, right? But the inventory gain, so we ended up having more inventory than we did last year, but the gap there was larger than the sales increase gap, which was smaller. So when you have a case like this, it's probably saying that we're going to see year over year price declines within the apartment segment again. We're not quite getting to stability. So that's unfortunate. Year over year, the apartment market saw a drop on average of about 4%. Now, if we annualize it back to the peak, you know, pre-recession, we're looking like nearly 12% below pre-recession numbers in the apartment market. And it's probably going to get a little worse before it gets better still. Now, in terms of what happened across the different price ranges in 2017, I'm going to pull up another graph that can kind of highlight this. And again, this is my Mickey Mouse version of Excel graph, so bear with me on this, but I'm going to pull it up. And then one quick second, move that over. Yeah, so what you're going to see here is I've kind of highlighted another series of things that I want you to look at. There's a lot of data here. Ignore all of it other than that band of green. And what this is it's on the far right side of the graph, you will see some big numbers, 26%, 24%, 20%, 27%, 29%. And what this is for homes between 600 and 900,000, and then the band of homes between 1 million and 1,250,000. We saw massive year over year sales increases. So that's really, really good news. The other part that I didn't highlight here, but is in this second text box that I wanted to just mention is the average price points. So again, 300 to 600, this is lumping in condos, detached and attached. So remember that 300 to 600, that we saw virtually about a flat market. It ranges from 3% better, 2% better, minus 3% better, 6 and 7. So on average, the average price points had a very flatlined year. So nothing too crazy, nothing to write home about. So that's enough about the price ranges. Now, because of that, you looked at that graph, guys, there was a lot of numbers and it ranged in a big amount. So what I'm here to say is that because that graph was a generalized graph, and what we do know is when we look a little deeper into the property type segments, the areas, and then now the price ranges, there's a lot of differentiation that's going on. So don't take my word today as gospel in a sense that that's how we would paint the whole market with one brush. You definitely need to dig in with your Redline agent to look further. Where you live, what type of property, and then the price range will tell you the true story about what's going on. Because there's a lot of changes. And then when you take the external markets around Calgary, there's even more. So definitely know what you're talking about with somebody who's willing to compare the specific data. So as we say goodbye to 2017, and now we're in 2018, is the general story is, nothing overly sexy. We had a little bit of a bump and an increase for the majority of the marketplace. We have a little more stability and strength. That's because our economy is coming back. But that's really it. Detached market trended upwards along with the attached markets. The apartment market is still on a slightly negative trajectory. Now, one thing is inventory is a little bit higher than I would like to see at this time of the year. So I'm going to be watching that. I'm going to pull up the inventory graph just to give you a bit of an idea around what I'm talking about. Is when you see this graph right here, you're going to see that we are higher now than the band. So we're on the far right. So that's December 2017. When you look at December 2016, we had quite a substantial less amount of inventory than we do today. So what does that mean? We don't know. It might not mean anything, but we do want to know that I'm going to be watching that trend to see if that continues to go this way, or are we going to kind of find a sweet spot where it doesn't start to affect things like absorption rates and days on market and things like that. So yeah, so that's just something that I want you to know, that there's nothing to worry about, but there's something we are looking at and we'll continue to update you on. So that's kind of the state of the union of what things look like right now. I'm going to hit on two quick points. One around sellers. So yeah, for sellers, like I just mentioned, that last little segment was very, very location specific. Make sure that your agent and your personal research is concentrated on your local market. things really vary from the edge of the city and the price ranges, so be careful with that. Now, in general, if you're listing a home in January, specifically, it can be a little bit slow. There's a bit of a real estate hangover as we crest the year. This is normal. Don't panic. Showings aren't going to come ramping up right off the bat. And if you do go live with a new listing right away, you're not going to have the full buyer power behind you yet that's coming. So, as always, what you want to do is pay special attention to the handyman touches that you should get done. Take away all the objections that a buyer could have, the paint touch-ups, the decluttering. Make sure that your listing can cut through that clutter of that higher inventory that I just talked about. And then the other thing about that is more is going to come back on the market that was taken off over the holiday season. And sometimes people wait a week into January. Sometimes people wait 2 weeks, a month, or even longer. But the longer things go, the more inventory you're going to have to compete with. So if you want to sell quickly, make sure that you're doing all those right things, putting the most value to the market right now. Very critical time. Now, for the flip side, for the buyers out there, what I want to let you know is that this isn't a get a deal market anymore. We're past the point where you see the deepest discounts that happen in the year. Like I talked about the word stability, that's where we sit for the most part. So it is stable. Sellers are being fair and they're offering good value to you as the buyer. Now, one thing to note though, as the next 30, 45, 60 days go on, there's going to be an uptick in buyers that are out there shopping with you. So if you want to have a little bit of time to be able to pick the home that you want, you're going to have more time now than you will going forward, because as they come out of the closet and buyers are coming out to go shopping, the market's going to get tighter. Days on market are going to get shorter. Listing price to sale price ratios are going to get tighter as well. So if you want to get the best house for the best price, you're going to have to do it here in these next 30 to 45 days. So take advantage. There's an opportunity now. Now, there's a couple things that we like to hit, which is either hottest market and best performing markets. I wanted to just scroll over briefly that the month of December had an incredible amount of areas, like as in there's 8 districts in the city, and property types that had like blockbuster months where they sold more homes than that actually came on the market. So that's a good sign heading in the slowest month of the year. So good news. So we're talking 1, 2, 3, 4, 5, 6, 7, 8. 8 of the, 32 total combinations sold more homes than were listed within their community and their district. So amazing. Now, one thing to note as well, citywide months of supply, that ranges greatly from detached to apartment to semi-attached to row. So to give you an example, citywide months of supply in the detached world is only 3.3. So pretty good, pretty healthy. The apartment market, it's over double that, 6.99. So again, that's why I say the areas, the price ranges, the types of homes, massive differences. Now, everybody likes to know what and where were the best performing markets as far as price appreciation. Well, we ended the year where we kind of held most of the year going, but the west side of the city, when it comes to detached homes, is nearly 5% above recession prices. So it's doing extremely well. The other markets that are doing, again, very well was in general the semi-detached market, the semi-attached market, and specifically the city core. It now also makes up most of that type of product of homes. And then the Northwest had an extremely good month, and year over year we're seeing 5 to 6% overall appreciation rates. So those two markets did the best. So if you're a homeowner like that, well, that's good news for you. If you're going to buy into that segment, just know that prices have come up, and make sure you know that. But yeah, so I could go data upon data upon data, and I'm not going to do that for you. But I will hit on, which is some people's favorite segments, is on the hottest communities specifically. And we rank these in 2 ways. It's kind of their sell-through, how many units sold in percentage to how many were listed. Again, we talked about 8 of those combinations of 32 sold more than they had listed. Well, here it's pointing out some specific communities that just went well beyond that. Communities like Somerset did extremely well. 3-to-1 sales to new listing, incredible. Coach Hill, same thing, 3-to-1. Langdon had a great month. Some of the other kind of bigger performing markets, Montgomery did very well, very similar. These are all communities that sold 2 and 3-to-1 sales to new listings. So you could tell the absorption of that community is going super strong. So if you're in those communities or you're looking to buy in, those dynamics really matter. Oftentimes, the other side of that is overall months of inventory for these communities. And I've got a bunch of hot communities based on inventory. And again, this has been one I've been throwing out to you guys all of last year, is Riverbend. Again, it's less than 1 month of inventory. Maple Ridge, Montgomery, Glamorgan, Coventry Hills, Country Hills, North Haven, Highwood, all of those have less than 1.5 months of inventory. Now, if you remember what I said before about overall city months of inventory, and the average for detached was 3.3, all of those communities are less than half of that. So again, there's some incredibly great performing markets in the city, even as we come through one of the slowest parts of the year. So guys, that's it. That's kind of the stats wrap. It's a little bit of a blend from December, but also a kind of a macro view of the year. I hope it gave you a little bit of, sense for what's going on right now. But what I want to leave you with is, for one, we're going to do this every month. Again, I appreciate your following, but just again, it's about your specific hyper-local information that's the most important, because there is such a mass difference across the city, price ranges and types, that you need somebody willing to show you those specifics. So thanks guys, have a fantastic January. Stick to those resolutions. I'll actually hold you accountable to that if you let me. And have a great day.